Mortgage refinancing, what brokers won't tell you about it. Financial decisions, as crazy as they may seem to third parties, are done for various reasons. Homeowners have those personal and urgent reasons as to why they decide to refinance their mortgage. Refinancing a mortgage is done because the homeowners seek a lower interest rate aside from the one they got from the actual mortgage. Refinancing a mortgage is also done to shorten the term of the refinanced mortgage and to raise funds for financial emergencies. What does it mean to refinance a mortgage? Refinancing a mortgage is simply a means by which you trade your old mortgage for a new one, which results in you having a new balance. To refinance is to get a new lender to pay off your old loan, which makes you indebted to the new lender. You pay off an old mortgage with a new one, this would make you get a new principal and interest rate. When a mortgage is refinanced, you are not indebted to the former lender because he is paid off by the new lender. How does mortgage refinancing work? Like any financial decision, it is a necessity to understand the process of mortgage refinancing. The process of refinancing a mortgage is often said to be easier and less complicated than getting an actual mortgage. After your first mortgage experience, if your credit score has improved, this is because you didn't default on your payments for the old mortgage, you will stand a chance of getting better loan terms. Benefits of refinancing a mortgage. The most advertised advantage of refinancing a mortgage is that it helps you save thousands on your mortgage repayments. The benefits of refinancing a loan are beyond the money you will save in the process. We will carefully list out some more advantages that may convince you to apply for refinancing. Released equities. The shorter your interest rates, the lower your full loan balance, and this ultimately releases more equities for you. With more equity in your hands, you can fund other property investment opportunities or a separate need in the home. Save your home. There may be some unplanned events that may threaten to cause a default in your mortgage repayments. When is it worth refinancing a mortgage? Due to the delicate situation surrounding the refinancing of a mortgage, it is safer for one to know when exactly one needs to refinance a mortgage. Before refinancing your mortgage, you should consider mortgage rate trends, the value of your home, and your credit score, among others. All of these factors help to determine if your decision to refinance your mortgage is a suitable one and won't put you in a rather worse financial state. Refinancing your mortgage will be an excellent choice if it indeed makes sense to your finances and saves you from financial difficulty. Cost of refinancing a mortgage. Having established how a mortgage works and the available options to suit your financial capacity, you should know the estimated cost. The size of your loan and your location are one of the basic determinants of your cost of refinancing. You are expected to pay about 2 to 5% of your total loan amount. While refinancing, you will be expected to pay closing costs, which include other fees. The refinancing fees include the loan origination fee, which is about 0.5 to 1.5% of your loan amount. This is also called underwriting. During refinancing, expect to pay an appraisal fee, which is done to determine the value of your property. This could be between $300 to $500. You would also need to get new title insurance, credit report fees, prepaid interest charges, mortgage points, and so on. All these costs are determined by company and location. Refinancing a second mortgage. A second mortgage is a mortgage you take apart from your primary mortgage on your property. Refinancing a second mortgage is done majorly by either combining both mortgages into one mortgage or by refinancing just the second mortgage. You would need to have over 20% equity in your home for successful refinancing. Steps in refinancing a mortgage. There are steps involved in the successful run of mortgage refinancing. We will be looking at each one briefly. 1. Decide your motive for getting refinancing. This could be either to pay off the loan quickly or to take a lower interest rate. 2. Carefully access your financial capacity. Just like in the process of getting the actual loan, you should have a great financial profile because your new loan company will go through it. 3. Check out the equity you have acquired in the house. This is determined by calculating the value of your home and how much you still owe in the mortgage. 4. You should carefully search for the best rates available in the mortgage market. 5. Apply for mortgage refinancing with various lenders. Do not limit your application to just a few lenders. Extend your reach to find the best. 6. Carefully select the best lender and refinance term that suits your financial capacity. 7. Have an appraisal of your home to ascertain its value. 8. Close on the loan. Final thoughts on refinancing mortgage explained. Refinancing a loan can be a great option for people who are seeking better mortgage options. Having understood the basics and options available for you, we hope you make a decision that favors your financial stand.